Good afternoon. Welcome back. Today's Tuesday, but it sure feels like Monday. 25th day of February, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. There was no open as normal today. I'm having, I think I'm having problems with both GoToWebinar and my computer. Had an update over the weekend and a Windows update. So anyway, normally you get to hear the pretty music introducing everybody, but we're already running late. So let's just dive in. We'll start out with our daily devotional. Our topic, we're starting a new one today, freely give. Why do so many groups have logos and branding? Do they help or hinder kingdom unity? We live in an era where professional, stylish logos seem to be critical for any organization. It can be one of the first things to do when establishing a new entity branding. Can you imagine Peter or Paul or other first century believers discussing a logo? Paul was able to say 30 years after the resurrection that the entire known world had heard of the Lord's life, death, and resurrection. No logo was needed. Interestingly, the sign of the fish, yeah, you've seen it on a lot of bumper stickers, was only introduced as a secret symbol in the 2nd century for those who were being persecuted. Yes, the logo was secret, like the secret handshake. In today's world, logos in faith-based organizations are everywhere, and we often identify ourselves by our logo. But why do we need them? Do we only have a logo because others have one? The critical question is this: is a logo helpful to us, being known by our love for one another? Scripture says we should be known for our love, not just our logo. Does your logo divide or contribute to a spirit of competition with others? What is our primary concern? It is the billions of people who have never heard of Jesus. God has given us a deep desire to belong. If you know Christ, the scriptures say we are part of his family. We belong to God. That is our primary belonging. Let's keep this in mind as we design our logos. They will know of our faith by our logos? No, but by our love. Too often today, we are known by our branding that distinguishes and separates us from others rather than our unity. Let's pray. Heavenly Father, thank you for the gift of unity in Christ. Help us as your people to be of one mind and heart, free from division, and bound together in love. Strengthen us to seek peace, to listen with grace, and to stand firm in your truth. May we glorify you in our words and actions, reflecting the unity you desire for your church. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. And a frustrating Tuesday. Yep. There it goes again. All right, I'm going to attempt to give you the numbers from around the world. If we can. Waiting for the numbers to load. Normally load right away. Plenty of internet speed. Really not sure what the issue is. That's just odd. All right, we'll go ahead and jump to the news. Roberta Flack, the Grammy-winning R&B singer and pianist known for her soulful hits like Killing Me Softly with his song and The First Time Ever I Saw Your Face, passed away yesterday at age 88. No cause of death was given, though Flack was diagnosed in 2022 with Lou Gehrig's disease, which left her unable to sing. And Apple announced yesterday, and we spoke about it briefly, to invest. Our thoughts and prayers are with the family of Roberta Flack. Her music was popular in a very important time in the history of our country. Apple announced yesterday to invest more than $500 billion in the U.S. over the next 4 years, making its largest ever spending commitment. The initiative includes hiring approximately 20,000 new employees across multiple states, primarily focused on research and development, silicon engineering, and artificial intelligence. A significant portion of the $500 billion will fund a new AI server manufacturing facility in Houston, Texas. The Houston facility will produce servers supporting Apple Intelligence, shifting the production of these servers from outside the U.S. to domestic facilities. The announcement comes amid renewed pressure from the Trump administration regarding tariffs on goods imported from China, where Apple assembles most of its products. Today's news. Consumer confidence declined sharply in February, notching its biggest monthly decline in nearly 4 years, as uncertainty related to Trump's trade policy also lifted inflation expectations, according to new data released this morning. The Conference Board's Consumer Confidence Index for February came in at a reading of 98.3, a significant drop from January's revised 105 reading and short of the 102.5 expected by economists. Treasury yields slid to their lowest level of the year today, as the gauge of consumer confidence joined a parade of evidence that the U.S. economy will require Federal Reserve interest rate cuts this year. A bond market rally had already trimmed some Treasury yields by as much as 10 basis points before the Conference Board's Consumer Confidence Index fell more than expected to the lowest level since June. Yields declined to new session lows afterward, with all benchmark tenors falling at least 10 basis points. From Reuters, the head of a new congressional panel gearing up to strengthen Capitol Hill's oversight of the Federal Reserve plans a broad review of how the U.S. Central Bank makes its interest rate decisions, including whether controlling inflation should be prioritized over safeguarding employment. A substantial number of the Financial Services Committee colleagues and the chairman want to discuss that issue. Is there really a dual mandate? And how does that affect the primary mandate of price stability? The Fed's dual mandate to foster price stability and maximum employment was imposed by Congress in 1978, and right now it is close to both goals. The unemployment rate is 4%, and inflation has eased to 2.6%, relative to the 2.2% target. A far better outcome than many feared. And that's it for news at the moment. Let's see if we got our data ever loaded. No, we did not, for the numbers from around the world. All right, then we shall jump to Logic 247, our 24/7 around the clock Emini alert service. It's not just E-minis, it's also crude, gold, silver. We're in week 343. Over the last 343 weeks, we've issued over 19,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did the recap this morning at 6:30 a.m. Eastern. Of course, she'll update it again this afternoon. At the time she did the recap, we had issued a total of 15 alerts. We've issued some more since then. That left 3 waiting, which gave us 12 actionable alerts, of which 1 or 8% would have been stopped out. Again, based on market structure and that very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. So it's early in the week, but I'll tell you what, the charts are just brutal. And we're going to head there in just a minute, and you'll see exactly what I'm talking about. Doesn't look pretty, but they say it's always the darkest before the dawn. I guess we're going to find out, because it's pretty dark out there. Now, long before we had the Logic 247 alerts, which are designed to help you learn how to read a chart and can come out anytime around the clock, 2 a.m., 2 p.m., whenever opportunity presents. But our original alert service, the concierge trade alerts, they are different. They don't come out around the clock. Now, the logic alerts have an entry price, an initial target, additional targets, and a final trade to target. CTA provides you with targets. If you're a member or trial member, read this information, make sure you understand it. Last night, I was able to get the CTAs out 5 minutes ahead of the open. And what that means is 5 minutes before the Tuesday session started last night at 6 p.m. Eastern. All members and trial members had all of these targets. The ES, the Dow, the Russell, crude, the NQ, gold, and silver. 5:55 p.m. Eastern. So we're going to go look at that chart. And at whatever point my computer may hang up, just sit tight, because Michael will join us about 50 minutes into the broadcast for a recap of what happened in the live training room this morning. So, daily chart of the S&P 500 E-mini futures. And look at this. 1, 2, 3, 4 big red candles. We're sitting just above the 24% fib retracement. And we've got red and falling overhead. Now, red and falling often leads to a pretty major decline. Okay? So, if this low right here doesn't hold, then the next step would be this trend line here. Let's make it a ray. So what that does is that just extends it out. So before we get to the 38% fib retracement, see, we've already taken out this low, but we're back above it. So it's really important how the day closes. A lot can happen intraday, and a lot does. Our next major area would be right here. And then this low, and this low, and of course this trend line if price continues to fall. We've already bounced off the 38% fib retracement. The all-time historic high sits right here. Okay, and it looked like we were headed to take it out until it didn't. And as you can see, we're hovering right above that 24% fib retracement. Again, this is why the daily chart is important, so that you're able to get the big picture look at what's happening in the markets. Also, institutional investors, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. Because of the size of their accounts and the size they trade in, they're the ones who move price. So, I encourage you, whether you trade futures, stocks, crypto, Forex, ETFs, whatever the case, just spend 2 minutes with the daily chart before you drop to the smaller time frames to begin trading whatever it is you're going to trade. Number one, it gives you a free look over the shoulder of the deep pockets that move price, so you can see that. But you can also identify where major areas of support and resistance are. Like overhead, boy, that's a huge wall of worry to climb. You got the step line. You got now this trend line here. Could we extend that out too? Yeah, we could, but for now we'll just leave it there. Step line, BBC, red and falling. The green line is called the BBC because it stands for bull bear cross. When price gets above the green line, we're bullish and expect higher prices. When it gets below the green line, we're bearish and expect lower prices. Now the pullback to the BBC holds more often than it doesn't, whether it's pulling down from above or pulling up from below. But eventually it trades through, keeps the markets fluid and tradable. We just keep getting more and more bad news. In your mind, what do you think it would take to turn it all around? End of the war in Ukraine, some kind of deal with China, Russia. I'm sure you have your own ideas. So where we close today, again, we took out this low by just a little bit. And we're getting very close to the lowest weekly trading zone on a Tuesday. We haven't got there yet. Now we're going to go from the daily to the 30-minute. This is where all alerts are created, both the Logic 247 and the Concierge Trade Alerts. The vertical line separates today, Tuesday, from yesterday, Monday. These are this week's weekly trading zones. Now the lowest weekly zone is way down here at 5,800. But as you know, we had very wide zones this week. So this was the opening candle last night. So 5 minutes before the open, everybody had these targets, all members and trial members. So this was the opening candle. It ran into resistance at the step line. And then the following candle just took us right down to this low from yesterday, hitting the short target. That candle, the entire thing, it's a 30-minute candle, had a high, or it opened at 6,007, and it closed off the low, but it hit 59.97. The low is 59.95. So it only takes 2 points on the ES to get your goal for the day. Now up here you can see where price retraced to the BBC and the pullback held and held and held and held, right? Here, red falling turned to blue and climbing. We attempted a retracement to the BBC, but there just wasn't enough buying interest to complete the pullback. So that sent us back down to the short target and to the weekly zone at 59.91/92. We consolidated, wide consolidation there. Only one of three things happens when we hit a weekly trading zone. 70% of the time, it's consolidation. 20% of the time, rejection. 10% of the time, price just slices through a weekly zone like it's not even there. When that happens, price will typically retrace back to the zone it sliced through, continue in the direction of the slice. Now on the way down, you'll see we had what I call the perfect stack: price, step line, red and falling, BBC. The step line has hooked right. You know those things from when you were a kid in school, what's different about this picture? Okay, we had all this, then we consolidated again at the zone. Now price is retracing to the BBC. Whenever the step line crosses red and falling, and it hasn't even actually crossed it yet, it's because this move happened so fast. This was off the 10 o'clock news. But as you can see, it's slowly plodding back to here, which in this environment, in this market today, we would expect that to be good resistance and give us another leg to the downside. On the Dow, here's where we opened last night. Price made a move up to the BBC. Pullback holds more often than not. 1, 2, 3, 4. Let's see, 1, 2, 3, 4, 5, 6, 7. 7 30-minute candles. That's 3.5 hours. And then, as blue and climbing turned to red and falling, we made our trip right down to the short target. And this low right here was just a tick or two, or maybe a point off this low from yesterday. So support will always send the market looking for resistance. Resistance will send us looking for support. Support will send us looking for resistance. And this is the 9:30 opening candle on Wall Street. Typically the largest candle of the session under normal market conditions. This thing was green all the way up to right here. You see where the step line crossed blue and climbing? That's an important price, important area. Hit it to the T. And then in the same 30 minutes, retraced and closed red. That took us on down to the short target again. We caught a bounce, back up to the BBC, back down to the short target, back up to the BBC. Now, red and falling is just now crossing the BBC. The step line has hooked right. So I suspect this market is going to attempt higher. It's already attempted higher and failed. We need to see it take out that high, that high. And really, before I would consider going long, I would want to see it get up to about 43,700 to 43,720. That would be sufficient to get your goal for the day. With the Dow, it takes 20 points. The Russell. This is the opening candle. Pull back to the BBC. Pull back, held, and it held. Blue and climbing turned to red and falling, taking us down to the short target. It looks like to the tick. Support sent us to resistance, back to support, back to resistance. And then again, here's where it got wonky. This was a 9:30 opening candle, and then we plunged off that 10 o'clock news. This is the low of the session so far. Step line is attempting to cross red and falling. So we'll see if price can make its retracement all the way back to the BBC. On the NQ. Opening candle, and the second 30-minute candle took us right down to the short target to the tick. Support sent us looking for resistance, but we only got as high as this opening high last night. In fact, we didn't even quite get there. Blue and climbing turned to red and falling, took us all the way down to the zone. 21,279/280. Support sent the market looking for resistance. Surprisingly, we got through the BBC, and this high right here pretty much lines up with these opening highs here, and then down we go along with the rest of the market. This is pretty serious. Here's the lowest weekly zone way down there. So again, the step line is attempting to cross red and falling. Price is attempting to retrace to the BBC. If it can get back up there, that's resistance times 2. When price moves up to a weekly zone, we expect resistance until proven otherwise. And of course, the pullback to the BBC holds more often than not. So we have 2 reasons for the market to find resistance here. Give us another leg to the downside. I would watch this area right here where the short target is. If price can overcome these 2 obstacles, then I would anticipate resistance right here. Crude. Here's where the market opened. We dropped to the BBC, pull back, held, and that sent us up to the long target. We consolidated for a few hours, and then look at this move through the short target, through this zone, and the lowest weekly zone is down considerably farther at 65.10. The step line is attempting to cross red and falling. So it gives the impression that all the markets are trying to recover. But boy, there's a whole lot to recover from. That news hit hard today. Gold. Here's where we opened. We quickly dropped below blue and climbing. When blue and climbing or red and falling get directly above price, that is potential resistance. And when blue and climbing turns to red and falling, we anticipate lower prices. So we came down through the target, this bullish cross right here, right to the zone. Consolidation. And then we took a drop down to here. Just missed basically that area right there. where the step line crossed red and falling, back up to the BBC, and then a leg down, just below that low there. Now, when we trade through a short or long target and price manages to pull all the way back, that short target, as you can see, will often become good resistance. And it was. And it sent us down even further, all the way through this zone. And we fell so furiously there was no chance for price to even retrace back to the zone it sliced through. Now the step line is starting to hook to the right. If the step line crosses red and falling, we should get a retracement or an attempt at a retracement back to the zone and the BBC. But given the current market conditions, I don't know that that's going to happen. The last is silver. We consolidated here at the open, and price just stopped right there. Looking left, no real reason. And then we consolidate again at the zone, drop through the short target, hit the zone, bounce up to the BBC, resistance, pullback held, then another leg. So we had a leg, retracement, a leg, a retracement, a leg, and just like the other markets, step line is starting to hook to the right. If it crosses red and falling, then we anticipate a retracement back to the BBC. Again, that's under normal market conditions, and I think most of Wall Street's pretty freaked out right now, so where we would typically get that retracement, I don't know about today. I honestly don't. This is the lowest weekly trading zone for the week. And again, we had wide zones, and to be way down here with zones as wide as they are on a Tuesday, that alarms me more than anything I read in the news. The news is fundamental, and we are technical traders. So this is, see, we're a little bit higher than we were. That's the ES. Trying to make this retracement. Now, right now, the BBC is at 59.79. And price is at 59.70. So if we get up to 59.79, it looks like we're trying to rally, but just remember, this is waiting right here, and the pullback holds more often than it doesn't. Here we did overshoot it just a little bit as we headed into the news, but then the news tore it up, and then we got consolidation across the zone here. Well, let's see, did that page ever load? Nope, it did not. Oh, is it starting to? Oh, it finally loaded. Okay, I'm going to assume these numbers are correct. Currently the Dow's up at 94 points. The NASDAQ is down 200, and let's see if that makes sense. Okay, we closed down here, and we're up here. Yeah, that makes sense. Okay. So the Dow's up 94 points. The NASDAQ's down 219. That's well over 1%, almost 1.25%. S&P 500 is down 29, and the Russell 2000 is down 16. In the commodity basket, crude oil down $1.91, trading 68.79 last. That's a drop of over 2.5%, or over $1,900 per contract traded. Gold down $48.70, trading 29.1380 last. That's a drop of almost 1.75%. Silver down 84 cents, trading 31.76 last. That's a drop of over 2.5%. In the Asian markets at the close, the Nikkei fell 539 points, almost 1.5%. Shanghai dropped 26, and for the Shanghai, that's almost 1%. The Hang Seng fell 307. That's over 1.25%. And in the European markets at the close, FTSE up 9, the DAX down 15, the CAC down 39. Pretty quiet there. So we had a big red day in Asia. It was a mixed day for the UK. And it is a mixed Radio Tuesday here in the US of A, with the Dow being the only one in the green by 88 points, which isn't much for the Dow. The NASDAQ is down 222, well over 1%. S&P down 30, Russell 2000 down 15, almost 16. I believe it's what they call blood in the streets. To become a member, to become a passport holder, send an email to support@cfrn.net. In the subject line, just put, I want to become a member. In the body of the email, put your name, your phone number. I'm not going to call you, but we will send you an email that explains what it means to become a passport holder. And there's a link you can click to seal the deal. You're going to get 2 hours of live training every trading day. That's something 9 out of 10 new traders don't get. No matter what profession you choose in life, you need somebody to teach you how to do the job. Banker, baker, candlestick maker. Just makes sense, right? But because initially when people look at trading, they go, oh my God, that's so simple. Because you're looking at what's already happened. It's what you can see that makes the difference. So that's why learning to read the chart is important, so that you know where to expect potential resistance, potential support, and find the windows of opportunity in between. Now, the live training room, it's 2 hours every trading day, 9:30 a.m. to 11:30 a.m. Eastern. It's an interactive environment. That means you're trading along in your demo account so that you can qualify to go live, and asking every question that pops into your head. Every question that pops into your head. Because it's a mechanical trading methodology, pretty soon you'll run out of questions. Or you'll start to ask a question and realize you already know the answer. But you might ask it again just to see if the answer has changed, and it hasn't. It's all carved in stone. Along with 2 hours of live group training every trading day, you get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you get the Logic 247 alerts round the clock, the concierge trade alerts the second they're published every evening. On Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. We've published the zones every week for our members and trial members for the last 15 years as of this past December. Once the zones are published Monday morning, no matter what happens in the market, they're carved in stone. And we got a number of markets closed below the lowest weekly zone last week. So this has been now 2 very serious down weeks. And you're able to attend the members only workshop on Thursday night, 8 p.m. Eastern. We've had the members only workshop every Thursday night since 2008. Used to be at 9 p.m. and now it's 8 p.m. Eastern. As a passport holder, you'll have access to that and the private channels in Telegram. We have public channels which you have access to when you're on the trial, but once you become a member, then you get the golden key that opens all the private channels in Telegram, the discussion groups, everything. Everything a trader needs, all under one roof, one low price. Now Michael should be here any second. Let's go ahead with our good word for the day. We started this yesterday, moving from failure to success, part 2. Proverbs 6:2. You are snared by the words of your mouth. A noted psychiatrist remarked that 2 of the saddest words in human vocabulary are if only. He believes people who get trapped by their failures spend their lives saying, if I had only tried harder, if I had only been kinder to my kids, if I had only been more truthful, if only, fill in the blank. The way to change that mindset is to change your vocabulary by substituting if only with the words next time. Next time I will try harder. Next time I will be kinder to my kids. Next time I will be more truthful. The Bible says you are snared by the words of your mouth. And a snare is a trap. Have you ever seen an animal caught in a trap struggling to be free? Your words can do that. And they don't just affect you, they affect others. Maybe you think we're making too big a deal out of this. If you do, read Proverbs 15:4. A wholesome tongue is a tree of life, but perverseness in it breaks the spirit. Or Proverbs 18:21. Death and life are in the power of the tongue, and those who love it will eat its fruit. Jesus said in Mark 11:23, whoever says to this mountain, be removed and be cast into the sea, and does not doubt in his heart, but believes that those things he says will be done, he will have whatever he says. What do these scriptures have in common? They confirm that our words breathe life or death into everything. So instead of defeatist talk, speak victory over your situation. Instead of speaking failure, start speaking success. When you do, God will honor the fruit of your lips. And that's our good word for today. So, Michael should be rolling in any second. So just sit tight and he'll be right here.
There we go. All right.
Did you have trouble logging in?
No, I did not this
Yeah.
time.
Yeah,
I
I'm
was just,
still and I'm having problems with web pages loading. I don't know what's suddenly the
huh. I saw the thing from GoToWebinar, their ticket that you had submitted.
I maybe that was from yesterday. Oh, that was from yesterday. Yeah.
Oh yeah. Well,
Except
no, I got right
because
in.
because other web pages aren't loading, I'm thinking it's something other than just go to. I think I've got some kind of computer issue, so I don't know. But
Well,
here, I'll let you do your thing and I'll
okay,
figure out
okay.
what I'm going
Then
to do.
I will do my thing over here. Here we go. Should be looking over here now. All right, looks good. Here we go. Good afternoon,
Now,
everyone.
yeah,
Sorry,
yeah,
I'm
yeah it
okay.
does look good.
Oh,
But
okay.
what's interesting is normally when you take over, it pops up on my big screen, but it popped up on my other monitor. So I had to drag your screens up to my big screen so that anybody watching on YouTube could actually see it.
Hmm.
So
I wonder.
something weird's going on. I don't know.
Yeah. I mean, it's not just you. I mean, I'm not having trouble today, knock on wood. I'm not having trouble getting in today. But but it sounds like there may be something else going on, something with the cookies or something like that. Maybe screwing things
Something's not right. Okay. All right. I'll let you do your thing.
up. All right, here we go. Good afternoon, everyone. Today is Tuesday. Is it Tuesday? Today is Tuesday, February 25th. 25th, only 3 days left in the month. Wow. Well, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Just click on that purple button. When you do, you will be sent to this registration page. All right. On this page, all we need is your name, your email, your phone number. There's 5 multiple choice questions. Answer those. Down here at the bottom, the thing we really need down here at the bottom is your TradingView login ID. Okay. Now, the TradingView login ID, I've been going through this a ton lately. The TradingView login ID is this right here. Right, when you hover over this thing, like when I hover over this right here, it's not giving it to me, but when I hover over this, it will say TV trades, or if I'm logged into CFRN, it would say logged in as CFRN. I don't know why it's not doing it. There it is right there. See, it says TV trades. That's what I need. Now, yours might not be there. Yours might be over here somewhere and just have like an initial, like the initial of your last name or something like that, like an L. And you hover over it and it says law or something like that, or Larry or something. Whatever it is, that's what I need. What you're logged in as. That is what I need. Okay. All right. So that's how you take the free trial. Now, results. Today, we had a good day today. We ended up, well, we tacked on one trade that we took at the very end. It was 75 ticks on the NQ. We were minus 16 on the NQ until that trade. There were some other nice trades right after that too that I didn't add on. But today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Just want to see who all is in here right now. Dan, I didn't see you in there this morning. You were in there this morning, Dan? Dan H. Anyway, we ended up, if you're going to read the spreadsheet, I already said this, I think you got to read all the CFTC risk disclosures down at the bottom. I got to say that every time I show the spreadsheet. If you were in there this morning, then we got 59 ticks on the NQ, we got 29 ticks on the Russell, 79 ticks on gold, and 50 ticks on the ES. Which is $1,855 with one contract this morning. Today took 30 minutes. I stopped out on 3 trades. The ES, the Russell, and the NQ I stopped out on to start out the day. So it took me 30 minutes and 12 trades to recover from that and get to $2,300 a contract. That was with 10 contracts on. All right, so $230 with one contract. And that was one big ES trade that managed to get me from almost back to break even to well above break even. We ended up taking a total of 33 trades. So we took another 21 trades after that. And that puts us at a total of $18,312 with one contract on the month of February so far. Over 14 business days, averaging $1,308 per contract per business day. On the year now, we're at $50,490 over 34 business days, averaging $1,485 per contract per business day. That is with one contract. This is with 10 contracts. Okay, over here, the 24/20 blueprint, where you add one contract per month, as long as you reach your goal every day, you should be able to add at least one contract per month. Okay, so this is just adding one per month. You started out January, one contract, 37.70. You started out February, two contracts, now up to 42.05. Okay, so the total would be 79.75 total if you traded just like I did in the morning session, just getting the goal. Now, that's not an easy task. Sometimes you'll do better, sometimes you do worse. But this morning, for instance, if you didn't get stopped out on that NQ trade, you might have gotten the goal a lot sooner, a lot fewer trades. And if you had that whole ES trade without the stop out on the NQ trade, that number would be a lot bigger right there. But it's going to differ somewhat. But your average $1,329 an hour if you did it just like me. Okay. Worked a total of 6 hours so far this year. So yesterday was 4.5 hours, and today it brings it to exactly 6 because I did exactly 30 minutes this morning. It's odd that it comes out with nice round numbers like that. All right, so let's get into the trades. We traded a little bit on everything. We traded more on gold than anything else. So gold was wild today for a long period there. Well, not a long period, a short period there. Gold was wild. I'm going to just click Alt and back because there are so many bars on this. It would take a while to scroll back screen by screen. See right through there where I was trying to show, right all through there. There were so many bars in there. Okay, so here we go. Now, the gray vertical lines are trades that set up that, well, right here, I could actually get this one. On gold, we started out with 2 ticks on that one, then 2 ticks on that one to get us to 4, then 10 ticks on that one to get us to 14. And these were all valid trades in here that triggered. Most of them were positive trades. This one right here, we went from 14 to 19, so we got 5 on that. Then we went from 19 to 34, and we had a break even. And then we went from, down here, we have a big one. We went from 34 to 39. Then we had a trade in here. Somehow we went from 39 to 69. So this is where all those bars triggered like really fast between 10:35 and 10:40. We had all those bars in there, 10:40 to 10:45, all those bars. It's a ton of trading going on in there that I didn't get. I was showing people stuff in here, right? So these were all valid trades, and I think every one of those trades was either a break even or a win, but we ended up with 2 break evens out of that whole bunch. Then right here between 11:05 and 11:10, all these bars, something was happening. I don't know what. We got another break even. Then we went from 39 to 69 on this one. We got 30 ticks there. Then went from 69 to 74. Then we had a break even and went from 74 to 79. And that was where the trading ended for us this morning. Now, you can see that there were plenty more opportunities in here. You see all these things. That's not using the setups we use in here necessarily, but there were plenty more opportunities. If you were trading, I'm just going to show you this on this one market, all right? I won't show you on all of them. If you're trading a little more conservatively and trading with the trend, then you can get rid of the slingshot and just trade when it goes into or comes out of the overbought when you're below the YBR, or goes into and comes out of the oversold when you're above the YBR. Okay, that will give you trend trades. Now, the more aggressive one is to trade when it goes into the overbought. You just sell the open of the bar. The conservative one is to wait until it comes down out of the overbought and you sell the close of the bar. Okay. Conservative is going to keep you from the flat spots, from stopping out on the flat spots, but it's also going to put you in a full bar later. Like in this case right here, it would have caused you a stop out. Where if you would have done the aggressive one, you would have been in at the top of that bar instead of at the bottom of that bar. Okay, so it's kind of a mixed bag. If you're quitting when you get the goal for the day, then either one's going to work out for you long term. So I'm not going to go through every single trade because we end up getting a little bit later start than we normally do. But we'll see if we have it. We don't have anything here right now, right at the moment. Okay, but gold had a lot of trades today. Had a ton of trades on the 7 range. I should have probably gone to a larger time frame. You normally do gold on the 9 range, but even if you go to a larger range, like a 19 range, or you could do anything with gold because it's base 10. See, on the 19 range, it had well, if you look at the numbers here, with the trend, it had some pretty good numbers. We didn't have that many trades though. We had just one trade right here. That one trade right there. One trade, actually, that would have been, well, it would have been a long trade from the bottom of that bar. Would have been okay. That would have been 20 something ticks, 20, 30 ticks. Would have been a short trade from the open of that bar. Would have ended up stopping you out. You just weren't that many trades if you do it on a larger time frame. But there were plenty. Now the Russell, we were back and forth on the Russell. We started out with a stop out on the Russell. I think we can just scroll like this. Yeah, we started out right here with a stop out minus 25 on the Russell. The next, let me bring this up here. Excuse me. The next trade that we had here, we picked up 13 ticks to put us at minus 12. Then we picked up 20 to put us at plus 8. Then 10 more to put us at 18. And I didn't do anything for all of that. And 10 more to put us at 28. And then one more somewhere to put us at 29. I think that might have been the one more. Or maybe right in here would have been the one more to put us at 29. But we ended up with 29 ticks total on the Russell today after stopping out on the first trade. You can see in here that there were some really nice trades. You see in the numbers here. Even though it's got a small number, that doesn't mean that the trade didn't work out. It's got a small number because that's all that was left in that bar. It did have the next bar as well. Okay, so I had that number plus 19. The next bar wasn't a full 19, but 10 or 15 in the next bar. All right, that was it for the Russell. Now we'll get over here to the ES. We had a fair number of ES trades today too. You can see on the 7 range, got a bunch of trades right through there. That was toward the end. I was trying to get above the monthly, the daily average for the month. So I was trying to get above at the end, and there were all those trades just traded, and I tried to take as many as I could right there. And we got like 4 ticks, 4 ticks, 8 ticks. That's how it was going. So our first trade here on the S was a stop out. We had a break even, and we picked up 4 ticks there to get us to minus 6. Then we had 4 ticks to minus 6, and then we had a 30 tick trade. I don't know if the 30 tick trade was here where it was, but we had a 30 tick trade that got us up to 24. And then the next one was in here somewhere. I think this was the 30 tick trade. So I missed a trade in here somewhere. We had the stop out of minus 10, then a break even. Then we had a plus 4 to get us to minus 6. Then we had that one, whatever that was. And then this one, this was the one that got me 30 ticks right here. That put me at plus 24. And then right after that, I had a break even and a stop out. That put me down to 14. So I had 2 stop outs at that point on the ES. And then I was talking through here, I think, making a video about trading options, I think is what I was doing throughout that whole period right there. There was one more trade here. We went from 14 to 26 and 26 to 34, then 34 to 38, and then 38 to 42, and then 42 to 50. Those were the last couple ones that I told you I was trying to nail in there and get over that one point. I did get over that point. During the break, this is all during the break here, the markets loosened up quite a bit, and there was a nice trade right here, a short trade that would have been triggered on the open of this bar right here. I pulled back a little bit before it went down nicely. There was a long trade that would have been triggered on the open of that bar, moved up. Going through all this, it was a long trade here, a short trade there, a long trade there, a long trade there, a short trade right there on that bar. You see that gave 7 ticks. It's got the number right on it. This one also had the number right on it. This one didn't have a number on it. If it has a number on it, it overlaps with a different trade setup using the trigger. Okay. You can see there was a bunch of trades in here. Now, just because it has a low number doesn't necessarily mean that was a stop out. Like this one right here has a 3, but it kept going in that direction. It only had 3 ticks left in that bar, but it kept going in that direction. Okay. That was the ES today. During the break, there were a bunch of trades here during the break, just using plain divergence trades. There was some right here. Using the aggressive trend trades, there was one right there. There was one right here. Using conservative trend trades, there was one right there. That wouldn't have worked out. There was one right there. That wouldn't have worked out. That would have. that wouldn't have, that would have, and that would have. The difference is coming out of the oversold and going into the oversold, right? When you execute the trade. So we ended up on the ES with plus 50. Okay, now the NQ, we didn't have that many trades on the NQ. At the end of the session, we had this one right here was the one at the end of the session we got 75 ticks on. But our whole morning was, let's do this. Our very first trade on the NQ was right here, and we stopped out on that one, minus 60. Then we had a break even right there, and then we had a trade there that was a pretty good one that got us to minus 16, so it was 44 ticks or something like that. Yeah, 44 ticks, got us to minus 16. Then we didn't do anything through all of this chop right here. That was really nice chop too, and I didn't get any of that. I missed it all. This was a really nice chop to be trading in. You see all the 50s and 30s and 20s and all that in there. Really nice chop, but I ended up missing it all. There was some more really nice chop right here. Somewhere in here, this was the last one that we got at the end of the session. We picked up 75 ticks on that one to put us at plus 59. And that was it. So now we're at the end of the session. Well, we're at the current right now. And there's no trade here and no trade there. There, right here was one. Right over here was one. Right here was one. Those were all during the break. Okay. So let's just get back to trading now. Right, that was all the stuff that happened. If I go back to the spreadsheet really quick, we ended up with plus 59 on the NQ, 29 on the Russell, 79 on gold, 50 on the ES. Put us at $1,855 a contract this morning. It took 30 minutes and 12 trades to get to the goal for the day. At that point, we're up $2,300. And we took a total of 33 trades this morning. So on the month, we're up $18,312 with one contract over 14 trading days, averaging $1,308 per contract per morning session. On the year, we're now at $50,490 with one contract. Right, I'm trading 10. So that puts us at averaging $1,485 per contract per morning session. Okay, the 24/20 blueprint, you would have only had to trade 6 hours so far this year and be up $7,975 if you started with one contract. All right. If you haven't taken the trial, go to mytradingiq.com, click on the purple button. No credit card is required for the trial. Click on that purple button. It's going to be into this registration page. Just fill it out. Right? Pretty simple stuff. So let's see if we can trade. We can't yet. Now, those of you guys who were not there this morning, I did a little bit about trading options, and I recorded that little bit about trading options. It's like an 11-minute recording. If any of you guys want that, you can ping me in Telegram, and I'll give you the recording for that. Okay, I know a lot of the guys this morning wanted to get that. So if any of you weren't there this morning, you didn't ask for it, you didn't get a chance to ask for it. If you want it, in Telegram, my ID is at trading_I_Q. That's my ID in Telegram. Okay. All right. So that's it. Now, we'll just trade. There was just a trade triggered right there. Now, the fact that it gave that notice right there means that when this bar closes, it's going to have one of these telling you how much profit was in the trade, or how much profit was not in the trade. All right, and right now it's profit in the trade. If I move my stop to break even, I'm just going to lock in 1 point on this. Oops, 1 point on this right now. This is some pretty good chop. It should get right up to there and then come back. So I'm going to lock in more than 1 point. All right, because it just got up to the top of the chop right here. Now I'm going to be doing a webinar about the different kinds of chop this coming week. This is the best kind of chop right here. Channel chop is the best kind of chop. Okay, this week, yeah, Wednesday, I guess. But this is the best kind of chop to be trading in, is the channel chop. It used to be the worst kind of chop, before we had something that we could trade effectively and chop with. It used to be the worst kind of chop because it stopped you out to the tick every time. But that's because we were entering at the wrong end of the bar. But now that we have the divergence trade set up, we're entering at the right end of the bar. And like this bar right here just gave 50 ticks in profit. And this is another one right here. TBT, buy. It's just giving you the opportunity again and again and again. And excuse me. But the ES right here is a sell. That is right there, got into the overbought. Should have been selling the open of this bar right here. The open of that bar was at 75.50, right? And I got it exactly at 75.50. So we'll see where that goes right now. Where should it go is what you should be wondering, right? Or what you should actually really know. And let me move this over here. Where should this go? This was the leg down. This was the retracement. I'm going to go to break even on this. Right, this was the leg down, this was the retracement. So we should have another leg down this big right here. Right, so I should be locking in profit on this, but let me draw it for you. Okay, so this right here was your leg down. Okay, it just took me on to break even, but this right here was your leg down. So it should give you another leg down like that right here. This retracement that it did right here was 50% retracement of that leg down. The green one right there is 50% retracement of that leg down. You see? So that was a perfect spot for it to bounce down off of. If I was paying more attention, I got the perfect fill on it, but I would have locked in some profit on that. Right? It did put in a lower swing, but because it didn't go down a full leg length like that, it's still going to finish this leg length down. Okay. But that's what you should be doing. Whenever you look at the market, whenever you take a trade, you should have an idea of what it should do when you take the trade. Okay. Let me slide that over here. Ronnie, are you in here right now? Ronnie is not in here right now. All right, so right here right now, it's got a short. You're back up here now. The same 50% retracement. It looks like it's retracing even more. So you can take the short right here right now, or let it do the 100% retracement and take it from a little higher up. There's 100% right now. So you could sell it right there at the 100% retracement. And now a 50% retracement of that is going to put you down here, right? So I'm going to throw my stop at break even, and it just took me out of break even again. But it should go down to like right here, right now. Right? It didn't finish the leg length down. It started a leg length up instead. So you're in some chop right here, and this is a different kind of chop, right? Let me remove that. I just said a minute ago, this is 3 different kinds of chop, and this is a different kind of chop. Let me show you what kind of chop this is. All right, it's almost the worst kind of chop. It's still kind of you're still in a little bit of a channel. You're still in a little bit of a downtrend because this didn't get up above this. If that would have gotten up above that, or if it would have stopped there, or gone up just a little bit and then come back down, then you would be in a bugle chop, and that's the worst kind of chop. But it's still a little bit of a trend, so you should still look for it to get down to here at this point. Now, there was a trade just here a second ago that I just took and got a break even on, and there was the one here that I took and got a break even on. There's a long trade right here. Now, this is going to be a counter trend long trade, okay, where it just went into the oversold right here. The entry point should have been right here, 75.75. Okay, I took it at 75.70. I'm sorry, 76 even. But this is a counter trend long trade, so you got to keep your stop close. All right, keep your stop close. Get it to break even in there. I'm throwing it to break even right now, and as it starts to run up, I'm going to keep it close. There, 3 break even trades right in a row. That's kind of tough. Didn't stop out though. I did have opportunity to take some profit on that one and that one. And this one, all of them had at least 4 ticks in profit. But what should it do right now? Okay, this is a different kind of chop. So we almost experienced all 3 kinds of chop right here. Let me draw it for you. All right, the 3 different kinds of chop. There's channel chop, which is this kind of chop. That's what we were in on the NQ. That's the best kind of chop. There's bugle chop. That's that kind of chop. That's what we're almost in right here. And there's triangle chop. That's that kind of chop. That's where we're in right now. You see, that's what we're in right now. So what's the difference, you might ask? Well, there's a couple of things that are different. How do you get that in the DOMS context menu on here? I will have to figure that out. I don't remember how I did that, Dan. But I do know one thing. I do know how to set up a quick key, because I also have, if you hit Control Z, it'll move the stop to break even. Like right here, we got another trade right here, right? So here. Now, when I have a chance to, I'm going to hit Control Z and it'll move my stop to break even. Okay, when I get a chance to in here. I don't think I have a very good fill on this one. I should have been in here at 79. I'm off by 2 ticks. But I should get a chance to move the stop to break even. I'll hit Control Z and you'll see. There we go. I hit Control Z. There, Control Z. I just hit it and see it bump my stop to break even. So I can show you how to set that up. Okay. To do that, I can show you how to set that up right now. I know how I did that. To do that, you got to go in here under trade and make sure you have trading keyboard shortcuts enabled. Okay, under trade, go in there and do that. And then come in here on this guy and go to global settings like this. And go to global settings and go to customize keyboard shortcuts. And that's going to bring up this window. And go to keyboard trading shortcuts. And then go here, move to break even. And I have mine Control Z is what I have it set to. You just put in what you want, hit assign, and say okay. Okay. Because that's even faster than going and clicking the mouse 2 times to get to stop to break even. You just do that Control Z, it's even faster. All right, now I chose Control Z because I'm right-handed. If you're a southpaw, you're gonna want to do something different. You know, if you are left-handed, then it's gonna be your right hand that's free most of the time. So you'd want to do something that's on the other side of your keyboard. It might be, I don't know, Control question mark. Can you do that? They have that. Yeah, they do. Or you could do like, it's got to be one of these 3 plus something else. Okay, one of these 3 plus something else. And you know, for me, Control is easiest to hit on that side. But you could do Control, Control backspace maybe, something like that. That looks like a pretty easy one to do. Or Control page up, page down, or up arrow, down arrow. Those would be pretty easy to do. Control left arrow. If you're left-handed. But just saying. Okay. All right. So this broke out of the chop, you see, down on the bottom. And we're almost down here to where it needed to go to continue the trend and do what it should have done in the beginning. I didn't take the trade. I don't think I took this trade, right? I took a couple of break evens in here and I took another break even somewhere else, I thought. But all 3 of these trades worked out, right? This was a nice trade from the open of this bar up. This was a nice trade from the open of this bar right here down. And now we're getting down to where it should have gone. There it is. All right, so now we should get a pullback to right here. All right, we don't have a trade set up for it because the black went with it, but we should get a pullback to right here. So that would be great if you did get a pullback to right there. And why should we get a pullback to there? You guys all know this, right? Get a pullback to there because it's 50% retracement of this leg down. And then what should you get? Another one of these, right? So if you go here, you should get another one of these, like that. That's what you should get. Something like that, okay? All right. Gonna bump that over there and that there. Slide this here and that there and that there. All right, so it's all good. Wow. I only have 1 minute left. This is going down even further than we thought. We don't have any other trades in here right now. There was one here on the NQ. You see it went 28 ticks plus whatever the next bar did. So it went about 40 ticks, it looks like. And this one, you would have gotten one of those on. And like you just got one there. I don't know. That seems odd that it's triggering like that. Hang on. Go back here and back here. Do that again. What did that trigger? Oh, 250 range. That's why it's a 250 range. Okay, this is something that you guys should, if you don't want to sit around and trade all session, that's a 250 range. So on the 250 range, this is one of those trades where, the opening is right here. And this thing should go all the way up here to the top of that. So this should have 400, 500 ticks in it probably. Okay. Using the same stuff that we just did, this is your leg length right here. This is a 50% retracement of that leg length on the 250 range. This is actually a retracement up to here, 50% retracement of that. So it's actually looking like it's going to go down. But given what it just gave us, the last time it gave you one right here, it went about 500 ticks. This first bar was a full 250. That was 250. And that was, looks like another 200 right there probably. So 700 ticks the last time I did this. Now, the entry point on this was right here. Okay, I just wanted to point this out. This, the 250, in the last 10 days, I think, or 11 days, I did a quick video on this a couple days ago. When I did the quick video, I think it was on Friday, but it had gone 10 days without a stop out. You can't really see it all right now, but it had gone 10 days without a stop out. So right here, if you like, even if you want to trade a micro, you put a micro on, you put a 275 tick stop on it with a 500 tick target. See if that doesn't work out for you. Just a thought. These trades on the 250 range work out really well. Go and look, like these things just work out really well. All right, that's enough. I've run over my time. I went to that because we just got the alert over there that popped up, and that's an alert that's coming from a different setup too. It's not the Divergent setup, it's something else. So it's more than one setup that's giving you the same indication. Now, let me go back to a 50 range here and bump that like that. And now I'll go here. If you have not taken a free trial with us and you want to, go to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Just click on that purple button. It's going to bring you to this page. All you have to do is your name, your email, your phone number. Down here at the bottom, make sure you give us your TradingView login ID. That is what we need to give you the charts. Okay. So there you have it. And with that, I can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Hopefully Dwayne can do all this stuff. Okay, so far so good.
Okay, recap of the recap of the morning session.
Today it took 30 minutes and 12 trades to get to $2,300 with 10 contracts.
Way to hang in there.
Thank you.
All right, guys, that's going to do it for today. We've covered everything. Now, I think I might have discovered one of my problems. I'm not sure, but my C drive was getting low on disk space, and so I wasn't able to play the opening that I normally play at the beginning of the broadcast. In fact, it wasn't even showing up in the uploaded videos section of GoToWebinar. So I did some research, and in order for Windows 10 to operate properly, you need at least 32 gigabytes of free space just for it to function properly. And I was down to like, I don't know, 19 or something. So I moved some stuff over to the D drive, and it kind of seems like it's working properly, but I'm going to move some more stuff to the D drive where I've got tons and tons of space, and hopefully I pray that will fix the whole thing. So with that, guys, thanks so much for tuning in. Wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell, God willing. Well, maybe I was wrong. It has happened before. Yep. Just not popping up right. That is perplexing. Technology is great when it works because you don't even think twice about it. You get dependent on it. You figure, hey, it just works. Okay, so there's no outro. That's okay. We'll see you all tomorrow. Be sure to read the disclaimers on the YouTube channel below this broadcast. Anything mentioned on this show is simply the opinion of myself, guests, co-host, etc. Always check with a licensed investment professional before making any investment decision. And that's it for today.